Now, let's talk about what we're seeing ahead of the MPC's decision. I mean, everybody's waiting to see what happens here because inflation has hit business and consumers alike. A weakened shilling has affected the economy at large. And one of the reasons the stock market has underperformed is because of a calibration of these two forces. The central bank, considering the multiplicity of factors, are they likely to hike interest rates and do so aggressively?
As you say, there are multiple factors that are playing in this space currently, and the problem that we have with them is that they now need to figure out what indicator to target. Do they target inflation? Do they target the shilling? Or do they target GDP? Their main mandate is to target inflation. So whatever decision that they will make will have a link to inflation so that they stay within their mandate. So naturally we will see them hike the rates, but not significantly, so that they also don't send a shock in the market. But you'll find they will gradually raise the rates as we go towards the end of the year, so that they give time to actually see whether the market is responding to a rate hike.
I mean, don't shock the market, but they've taken some shocking stances as well. I mean, the number of times that they've raised the interbank rates did create a bit of jitters within the banking system. Those rates have come down, but there is a sense that there isn't policy consistency here.
Yes, for the last month or 2 months, we have been seeing a bit of hesitancy on their side. They needed to come out firmly, or they need to actually come out firmly and say, this is the policy stance that we have taken, these are the reasons why we have taken it, and this is what we're expecting to happen. And they stick to it. But the problem that they've been moved by every whim from the market players, every political utterance from the executive. So they're in a hard place. They're trying to appease the players in this arena, instead of taking a firm stance. And as long as they don't take that firm stance, they create uncertainty, which will continue now making everyone else not know what to do. People won't lend, people want to borrow, people stay away from the stock market, because there's a lot of uncertainty that is revolved around the policies that they are making.
For anybody who's looking at Kenya's fixed income assets, for instance, and saying, do we invest in treasury bills? How do we assess this economy? What do you say to them? Because one of the things that we're seeing is subdued growth. So domestic output is low, inflation is high, the shilling is weaker, the import bill is high, and the CBK has really had to draw down its reserves in order to try to defend the shilling.
Yes, when it comes to fixed income, now it depends. In a current scenario where you are not really certain on policy direction, you're not really certain on what they have or what they're planning on doing. Staying on the short end of the yield curve will be the best thing to do. Stay in your 91-day treasury bills if you really have to participate in government bonds. Because if you really don't have to participate in government paper, you can actually go for commercial paper and fixed deposits, which give you that flexibility. So the way you will ladder your money market placements will determine whether you'll actually reap from this current confused position the market is in. If you place your money on 30 days, at least you can only lock in your money for 30 days. If rates go up, you roll over at a higher rate. If you go into a treasury bill, you're locked in for 91 days, where the bill can go up 4, 5, 6 times, and your money is locked in at a lower rate.
Let's talk about what's happening on the equity side. Sosini is up 4.5%, and we've also heard reports that this tea producer is looking to utilize some of the land it owns for coffee production for real estate investments, possibly.
Yes, it's called moving along with the head. When most people are moving into real estate, and that's where the returns are, and you're looking at it in the next 4 or 5 years, this property bubble will not burst. So looking at the revenues that you're getting from coffee, you reduce your acreage, put some nice housing estates. Housing demand is quite huge in Kenya. You'll make a bit of money on it. So depending on how they go about it, we should see it trickling into their bottom line, but not in the next financial year.
Also, other stocks that are up today, housing finance up 3.7%. And I mean, this particular company has aroused a lot of interest because we know that demand for property has outstripped supply. So they're going to have business going forward over the next 5 or 6 years. National Bank also up 2%. How do you explain that?
For housing finance, yes, it is a good counter, but they need to continue raising long-term funds. Their long-term funding is a bit constrained. So most of the times they're trying to use short-term funds to do a mortgage business. So until they manage to sort out their long-term funding side, then they'll truly become a true market player compared to the other competitors that they're having, S&L and other mortgages that banks are offering. NBK at current prices 24, a good buy, way down on its lows, about 20 shillings off its high, close to 30%, 38%, and they've just turned profit making, and we expect them to continue making profits. They will not maybe declare big dividends, but it's a company which is headed the right direction.